Thank you, everyone. Yeah, Canada Nickel is a relatively new company. We're just over 2.5 years old. We were formed for the Crawford Nickel Sulphide discovery just north of Timmins. We are rapidly advancing the project to feasibility study by the end of this year because we're a firm believer that the nickel market is structurally short of nickel supply, and witnessed the fireworks that happened back in March and April, which was about a year earlier than I thought it was going to happen. But at the end of the day, we need, there's a huge amount of nickel required for the EV market and very few places to get that supply. Our deposit is one just north of Timmins. We're in an established mining camp. We have all the major infrastructure that you need to develop a big open pit project already in place. And most importantly, in today's environment, we can be not only a low carbon producer, but a zero carbon producer for two big reasons. One, all of the electricity in the region is low carbon electricity from the grid, from hydro stations and nuclear power stations. And then secondly, the rocks that host this type of deposit have this unique ability that when they're exposed to air, they spontaneously absorb CO2. So our tailings and waste rock will actually generate a series of carbon credit streams. This is the biggest sulfide discovery since the early 1970s. And what's even more exciting is that we took a look around the district and we think there's the potential for another half a dozen type Crawford discoveries, and we're going to work our way through them over the next few years. In terms of the nickel market, demand was up 15% year over year last year. That's 3 to 5x what we saw with the other base metals. It was driven by more than 100% demand growth from the EV sector and double-digit growth from its historical uses in the stainless market. Nickel goes through super cycles every 15 to 20 years. We went through one in the late 60s, another one in the late 80s, one in the mid 2000s, and we're shaping up, what happened this past March is the first leg and what we think is going to be a super cycle period over the next 2 to 3 years. Analysts always underestimate nickel. Most analysts in 2021 had the market in a 3 to 5% surplus. We ended up in nearly a 6% deficit by the end of the year. And so we expect, very sharp demand growth from the EV market over the next few years. In terms of structurally, most of the nickel supply over the last 7 years has come from high carbon sources of Indonesia. The other issue is that nickel supply has become very, very concentrated. So again, when the issues with Russia and that horrible war with Ukraine emerged, not surprisingly, that was a big driver in that big squeeze that we saw in March. US and European automakers are not going to depend on China or Chinese controlled sources of supply. So deposits like ours located in Canada, are attracting a considerable amount of attention from the car makers. In terms of where we are, so Timmins is a 100-year-old gold mining camp. We're literally just up a highway north with all the major infrastructure that you would need, road, rail, power, right nearby. We have more than 80,000 people within an hour's drive of the mine site. So we'll have a workforce that can go home every night, which is much, much cheaper and much, much more productive than a fly-in, fly-out workforce. And again, this is a very, very established mining camp with all the support you would need. We completed a PEA last spring, over $1 billion NPV, 16% IRR. All we're doing is taking the same scale of open pit mine mill operation that you would see to a low-grade copper deposit, applying it to a low-grade nickel deposit. So we start at 40,000 tons a day, we twin it, and then we add some additional capacity to get up processing 120,000 tons of ore a day. We produce a nickel and an iron chrome concentrate. And you can see the kind of cash flows and cash costs we generate. In terms of projects that a major would ultimately like to own, there's a few boxes that you need to tick. First off, where you are in the cash cost curve. So we're in the first quartile. On the carbon curve, which is going to be increasingly important going forward, we're in the lowest decile. That number does not include any of the benefit of our tailings and waste rock. That's just, we can be that low carbon because of the low carbon electricity in the area. And we can use shovels and trucks that are able to use electricity today, and that allow us to have that lower carbon number. As I said, with the tailings and waste rock, we expect that number to be actually negative. In terms of nickel operations, we'd be among the 5 largest nickel operations globally. And we would be we'd be the largest base metal operation in Canada. And so, when you look at the majors and their portfolios and the issues in places like Chile and Peru, which were traditionally more safe jurisdictions but are becoming more difficult for miners to build mining operations, place like Ontario and Canada is very, very attractive. From the PEA, we've got a number of upsides that we're going to be baking in. A much larger resource, 50 to 100% larger than our PEA. We're adding 4 to 5 points of recovery improvement from the test work that we've been doing. And again, as we go forward, we're going to be quantifying the exact amount of carbon our tailings and waste rock can capture. In our PEA, we assumed everything was going to be sold in the stainless steel chain. That doesn't pay for the cobalt and PGM content of our feeds. But for the feasibility study, half of that will be going down the path to the EV market. In terms of the test results, we put out a series of releases in the fourth quarter of last year. And in the first part of this year, we were able to achieve 6 to 16 points of improvement versus our PEA baseline. And again, each one of those points is worth $90 million of NPV. So will be a substantial help substantially improve our NPV for the feasibility study. In terms of carbon, just want to point out the pictures on the right-hand side. That's how spontaneous this process is. All of that rock comes out of the ground dark black to dark green. Within a not too long a period of time, that piece of core on the bottom is a year old. It develops this white coating. That white coating is a mineral called magnesite, which is a magnesium carbonate mineral. And how it got there is the black mineral basically grabbed a CO2 molecule out of the atmosphere and converted itself into that mineral. The fact that we're going to grind that rock up into lots of fine particles to get the nickel out is just going to help that carbon sequestration process along. So Crawford, we're advancing very rapidly, and again, we've got this land package. We acquired a geophysical footprint, and the geophysics for this type of deposit is super helpful. We've got 40 times the footprint of a deposit that is the largest sulfide discovery since the 1970s. We went back using just the provincial geophysics records and some of the provincial drilling records to identify them. 10 of them have a bigger footprint than what we've had at Crawford, and 9 of them have had drilling that confirm they have the same kind of mineralization that we're looking for. Now, some people may say, okay, well, why are you so confident that you're embarking on a new nickel district at this point in time? If you look at nickel deposits, you need a rip in the Earth's crust to allow material from the mantle to make its way up. Generally, those don't tend to be little rips, and you end up with clusters of deposits. So if you look at nickel, the bulk of nickel resources comes from a half a dozen regions globally, and we think with what we know so far that we're pretty confident that Timmins is going to join that list in the next 2 to 3 years. There's already been a huge amount of corporate activity in the sector, with most of the deposits that have been known for a decade or more already attracting attention from the majors. And we think new discoveries like ours will end up on the radar screen in the next 12 months or so. We've gone up 8x since we went public just over 2 years ago. We think we have a substantial room, and you can see from here valuation-wise to run. And we've got a number of catalysts coming down the pipe. So we've did a $50 million financing, which sees us through until next year. We filed our initial permitting documents. We'll have a resource update out at the end of this quarter, and we'll have feasibility study done by the end of the year. So this year is going to be, we think, the most exciting year in the company to date. Thank you for your time, and drop by our booth at E1 if you've got any further questions. Thanks.